Wednesday, September 3rd. We're in the fourth quarter, and September started with a bang. Maybe not exactly the bang that you liked. We'll go over my results from Scalping, the alpha pick yesterday, because I was live on Substack. We'll go over some of the opportunities that yesterday presented us. The September watch list seems to be doing pretty well. We'll go over some of the screeners that I found. I was just kind of sitting on the couch and looking at stocks and maybe the next alpha pick, kind of finding it. We'll go over Google and Apple because that's huge. We'll go over gold. We'll go over Zscaler, all the earnings. Open Door. Have I mentioned it before? But I just want to start off this podcast with a little visual. So if you're watching the screen, you can see right now, diamond hands. Did yesterday feel uncomfortable? Absolutely. Did I lose more in the market than I made my first 2 years working out of college? Absolutely. But it is what it is. Just in case people think I'm a genius, okay? I will tell you, I sold the stock on Friday. Remember, Friday was a down day, which I outlined to paid members on Friday. Why I sold. It was up 10% yesterday. Now I sold half my position, so it's not the full position on Friday, but it was up 10% yesterday. It's up another 10%. The reason I sold half of it because the logic was I had journaled this one. Okay, I bought August 11th. It gained 20%, and I was taking 10. People were asking, "Are you taking profits? Are you taking profits?" No, I looked at the journal. And my thesis was intact. It was around earnings. Earnings blew it away. Okay, so I didn't take the 20% profit that I would normally take on a trade because the thesis was earnings. Great guidance, boomed 50%. So on Friday, it was reported on Thursday. After that, I actually locked in the profits on half of it. I looked at the thesis and it was still going, but I saw the 4-hour algorithm didn't have me out. So I said there might be more. It was up 10% yesterday. It's up 10% again. Am I buying back in? I will look to get back in when it gives me another signal in the 4-hour algorithm. Okay. I like this stock. I like the thesis of it. They just confirmed on earnings. I think it gets bigger. Again, paid members, you have access to it. So let's talk about another one yesterday because Alpha Picks. And Alpha Picks is a portfolio. If you don't know what Alpha Picks, okay? Alpha Picks is a data-driven portfolio. You get a pick on the 1st, you get a pick on the 15th. And since yet the 1st was a holiday, we had it yesterday. It comes out at noon. The portfolio is incredibly results driven. 210% during the same time period. The S&P was up 70%. These are numbers from August 14th. So it's been about a month. I need to update this screenshot. But the key to this is here. They tell you when to sell. It's a managed portfolio. They literally email you to do the work on your own. So I know from my time with Motley Fool, because we had Motley Fool as a family in the early 2000s, and me and my dad would log on. There were calls 1:00 in the afternoon, and there were calls. Okay, we're going to announce this month's pick. Boom. You could literally scalp that pick if you were fast enough. Now, the tools were different. Why did I start doing this with Alpha Picks? Because their audience is so large. It is a well-followed portfolio. Hundreds, if not millions of people subscribe to this. Hundreds of thousands, I should say. So there are quite a bit of movement. Okay? Not only does Alpha Picks give you a great performance, but you also have this type of opportunity. And I want to make it clear. This is an opportunity that is not part of the portfolio. So Seeking Alpha, it does not condone this. They actually try. There are rules around this. So they try and limit the amount of people that could scalp. We're just so lucky that we have a community, and live on Substack, I can go live. So we did it. I don't publish the name, but for everybody who's interested, what I did was, and live I couldn't find this, so I posted a separate post yesterday about what are the rules. Okay, the rules are simple. Go to the website around noon. You refresh like a mofo. You know, say you're a 15-year-old grabbing at your first girlfriend. That's what you do. Boom, 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 boom. If the pick is a small cap, less than 500 million, it could move higher. And we've seen that with several picks where they move 10, 15, 20%. Pull up a 1 or 5 minute chart, wait for confirmation and buy it. Once it loses confirmation, even if it's only a 1% gain, get out. Don't linger in the trade, okay? But what did I do yesterday? It was a larger market cap. I think it was around 2 billion, somewhere in that neighborhood. So what did I do? I bought twice the allotment, and it's doing well, okay? It was a gold pick. We went over yesterday how gold is a good one. And it's very simple. My process is super, super simple. So I put it in a post for everybody so we can see it, and I'll pull it up easily next time. But again, that's kind of what I did. Now let's talk about yesterday's stock market. We'll look at a 5-minute chart because yesterday was tough. But what happened? People bought the dip. They bought the dip. You can see this was the pre-market. We were down. They bought the dip on open, and then it couldn't hold. But in the afternoon, we continued up. That's bullish. That's a bullish signal. Now, the 4-hour algorithm, we can run this one on QQQ. It had you out. Did I get out? No. One day is not a trend. But what worked yesterday? And this is what's interesting. Crypto worked yesterday. Okay? IBIT was up like 3%. Okay? It was a good day for IBIT. IBIT doesn't have you in. I will be buying the next time it gets me in. It is up, let's see, 0.3% in pre-market. I will be buying another lot when it gets in. But maybe crypto is now becoming the digital gold because, again, gold was up yesterday. While the markets were down, gold and crypto were up. It was due to the bond market. The 30-year kind of spiked to 5%. It's not the 10-year. We saw the VIX spike. We saw the CNN Fear and Greed Index up there. We're at 17. If you look at yesterday, we came down and then went back up. So today, what is that VIX going to do? It looks like it's fairly level. Doesn't look like it's going crazy. But again, one day does not make a trend. When I look at QQQ and I say, okay, for my long term, the indicators are stretched. They are. But we're still on that upward trend line. So I'm not concerned. Let me give you a few opportunities in the core portfolio. Okay? Robinhood went under 100. Did I buy it? No. Do I think it's going to go up? I think I'm probably going to miss this one again. Last time I regretted it. It went up to 120. It was under 100. Today in pre-market, it's 101. You want that one for long term? I think you're fine. Again, they're having some product announcements in September. I think it's going to pump. NVIDIA back down below 170. 4-hour algorithm got you out quickly. Where do I think this one's going? I think it could go to 160. But long term, these guys, they just reported earnings. And they didn't include any China revenue in the actual earnings or in their guidance. If that opens up, this adds another NVIDIA on top of it. The market cap is $4 trillion. Can it go to $8 trillion? I don't think so. I think it maxes out at $5 trillion. Again, from 4 to 5 is not a huge jump for these stocks right now. You had Palantir hanging out. It was back to 150. We've talked about how it's sitting here at this 160. 4-hour algorithm got you in at 157. 4-hour algorithm trades you make over the last 24 months. If I told you that you could trade 22 positions over 24 months, less than once a month, and make 431%, you'd probably be fine with it. But if you buy and hold, you make 923%. Now, the valuation of this one makes no sense. Am I buying it? No. But for those that want it, you can get it. And again, yesterday was a steal. CrowdStrike. I've talked about this one before. CrowdStrike under 400 is a great steal. Yesterday, the low 407. You had your opportunity to get it yesterday. And I put out the September watch list right here. Okay? It was a heavy day. One stock was up 5% in the watch list. One stock was up 3%. One stock was up 2%. There's 7 strong buys in the quant. I've built a watch list on Seeking Alpha that is down here. September watch list. The entire portfolio was down less than the Qs, less than anything. Again, if you bought just the entire portfolio, you'd be down. And that's, again, it's an even weight, so it's not logical, blah, blah, blah. But I'm going to track that one. FYI, every stock in the list is up year to date from 11% to 459%. So it's not like I picked losers on the year. And I was sitting on the couch this morning, okay, on my mobile app, Seeking Alpha. And you can get, it looks a little different on the mobile app, but I wanted to find stocks. And you can see up over my head right now, trending AI stocks, okay? I was sitting on the couch. I said, let me look at some of the top stocks. This is in, if you go down to the bottom left, stock screener. And you just look at trending AI stocks. Okay? Let's look at one. The top one, PGY. And this is top trending AI stocks based on the quant rating. The quant rating goes from 0 to 5. This one has a 4.98 rating. And the quant rates it based on 5 factors: valuation, growth, profitability, momentum, and revisions. Okay? The analysis after their last earnings, you can see right here. Strong buy, buy, buy. Seeking Alpha analysts say buy it. Wall Street says strong buy. The quant says strong buy. Do I like this one? You're damn right I like this one. Now, here's the thing. It was down 1.41% yesterday. It's up in pre-market. It's bouncing back. Is this a good one? Ranked in the application software industry, 1 out of 184. Let's look at it. Let's analyze it with AI. Say you know nothing about this stock. We'll analyze it with AI. What space is it in? Well, its competitors, Upstart Lending Club and SoFi. Are those ones that I like? Yeah, they pop a lot. So I like it. Then you can look at what each Seeking Alpha one. Profitability, I saw C-. I said, that's not great. The only negative is the net income margin, indicating areas for potential improvement. Momentum is great. Revisions are great. And then you look at the positives and negatives, and you can figure that out. Okay. Now, do I like this stock? Yeah. So I'm going to put in a note. I'm going to add a custom note in here. I'm going to say today's date is 9/3. Found it on Trending AI Stock Screener, trading at 36.81. 36.81. I put 26. 36.81. Boom. Done. Save. The note is in there. So now what do? I go over to Trendspider, PGY. And I say, okay, let me look at the 4-hour algorithm. 4-hour algorithm has me in at 34.44. It doesn't trade all that well. Okay. It doesn't win. But you can see this huge win right here from 9% up there. Let's look. You can see the MACD has reset. The RSI at 61. I'm looking for this one. Does it have confirmation? It does. Am I 100% sure in this one? I don't feel like I am. So let me go long term and look. Well, we've got a positive 50-day. We've got a positive 9 and 21. We just have the 200, but that one's negative. That one may provide some resistance. So am I willing to get in at 36, knowing that the resistance, which came here August 4th, right on the 200-day, is at 39 or 40? No. That's the thing. The reality of this is it doesn't make sense for me right now, but I have this note in here. So if I check back in within a week, and all of a sudden, this thing's at 40 and it's sitting above the 200-day, maybe I take the chance. Again, that's the way I look at these things. That's why I tell people, we just went over Alpha Picks. Seeking Alpha Premium is an opportunity for you to actually find stocks before they pop. This one may pop. It's not the 4-hour algorithm, but it's an AI stock. I like this one. Again, application software, it's ranked number 1 out of 184. The quant has a way of beating the market. And it's got a 17% short interest. So when they announced earnings and we saw that pop on earnings, boom, it's because they have 17% short interest. By the way, just so happens there's 10 analysts that cover this on Wall Street. They think it's worth $40. Is it worth me getting in for a 10% gain right now? I think there's better opportunities in the market, so I'm not going to do this one, but it's on my watch list. I've got a note in there. Now, as far as the overall economy, we are heading into holiday spending, and this is concerning. Holiday spending likely to see sharpest decline since pandemic. That would be a bad thing. Okay, we're in a consumer economy. Ask your friends. Go to your mom group after yoga at 1 p.m. and ask the moms, are they spending more on Christmas or less on Christmas this year? It's a good gauge of how strong the economy is. It's a good gauge of how people are feeling. This survey, people are going to spend less. That's not good for the stock market. It's not good for the stock market. Put on top of that the potential of tariffs and supply chain issues, and you've got the potential for a pullback after the holidays. Because if holiday spending isn't going well, you're going to know that after Black Friday, and boom, the market will respond. So understand, that's what's setting up right now. Now, big news for me, okay? In huge legal news, Google not required to sell Chrome, and they can stay in the Apple ecosystem. So Apple basically gets, I think it's about $100 billion, which could rise to $200 billion. For Google pays them. It's a no-brainer. Google pays them to be the default search on iPhone devices at $100 billion. That could rise to $200 billion. Okay, that's why Apple and Google are up in pre-market. Apple is up 3.72. Google is up 6.73. Okay, for Google, it means they don't have to give up their competitive advantage of owning the browser. They own you with all of the data. They look at your email in Gmail. They look at all your search results. They target you with advertising. That's what it is. The valuation for Google, if we just go look at it, it's crazy low. Even though it says it's high at 21, it's not high historically compared to the rest of the Mag 7, which are trading at 30. So that's the bump that you're seeing today. It's just bumping up to get the valuation more in line with the rest of the thing. If the valuation is it, I think this one goes to 240 to 250. Throw in the premium tech valuation because they are leading AI. And I think you get a stock that could go to 260, 270. Now, Wall Street hates this one. They're at 222. In pre-market, you're trading at 226. They will up their price targets. This is one that I like. This is one that I've liked for a little while. I think the weight is just lifted off of it. I think the street is just so focused on a search revenue that they're not looking at this one correctly. But again, for those people who didn't like Google at 145, if we go and look at Google on a chart, if you didn't like Google at 145, you're not going to like it at 222. And you can see here, if we look at a weekly on this one, it's a little extended. So would I be buying here? No. I would be looking for this trend line to maybe pull us back. And my guess is, and it's just a guess because we haven't seen it, but I think 200 is going to be your support. I think it actually moves to 220, yesterday's price. So again, for Google, I think if you didn't like it at 145, you're not going to like it now. Now for Apple, look at Apple because I have an idea for Apple. Apple is 50% of my portfolio. So I follow this one really, really closely. We've got a iPhone 17 announcement coming out. Okay. This court ruling means 100 to 200 billion of free revenue from Google to remain. Maybe OpenAI starts paying them. Maybe Perplexity starts playing. Maybe they go into some type of partnership with another AI company. Who knows? But again, where does Wall Street think that this one is worth? 235. Where are you trading in pre-market? 237. It's over that. They will start taking this one up a little. But I think with Apple, it's a little different. Okay? Because if we look at the chart of Apple, you'll see there is some resistance at 240. This 237 right there. We can go and look at a weekly chart. 237 has been a resistance level right here. We broke out of it in December. We broke out of it in February before the bottom fell out to 200. So here's an idea for people that have Apple. Okay? Get QQQ. Because if you're looking at Apple and you're saying, oh, okay, let's look at the valuation. It's 31 times forward earnings. Okay? Usually growth takes care of that. But their growth is 5.97% year over year. And it's expected to shrink. We do have an iPhone 17 event. But I think with this thing, I think you could trade Apple at this 240 and pull back. Now for long term, it's a $260 stock. I don't care what you say. It's a $260 stock. But for me, short term, I'm looking at this opportunity to pull out of Apple and get into the Qs. The reason is because you still have major exposure to Apple in the Qs. But you also get Broadcom, you also get Amazon, you also get Microsoft, you also get Nvidia, you also get Meta. It's just a way to pull some money off the table, put it into the Qs. Again, I'm 55 years old. Do I want to take the risk that I was taking at 20? Probably not. So it's just an idea. And again, the thought process is there, using the charts, using everything to make sure that I'm optimizing as much as I can. Am I going to be perfect? No. Am I going to make mistakes? Absolutely. And I brought up yesterday, gold, it's at all-time highs, set fresh records. Fresh records. This article kind of points it out. Highcroft Mining and McEwen closed 20% up to lead dozens of mining stocks to 52-week highs. And you can see all the mining stocks right there. So this particular one, I have my favorites, and I've got enough gold in my portfolio that, yeah, that portion of my portfolio did great yesterday. Now, Zscaler beat earnings. This was incredible because this was up like 10% in pre-market. We can go look at it, but it has pulled back. We're going to, I need to pull this out. Let's just remove all. Yes. But let's look at a 5-minute chart and you can see it popped up here to 305. We're trading at 276. It popped up to 305 on the announcement of earnings. And then it pulled back. But they did really well. Now, why did it pull back? Well, year to date, this one's up 52%. 52%. Wall Street thinks it's worth $320. Okay? The only problem is the valuation. It is super expensive. But when you look at the 4-hour algorithm, okay, did it have you in? Yeah, 273. You could have gotten out there. Would I have said get out? If this were my stock, I'd be looking at the all-time highs, which is way back here. You just kind of pin it right here. And boy, where's that 374? That's where you're probably going. Again, stock charts have memories. Are you going there over the next few weeks? Probably not. But the 50-day, you can see how it bounced right off the 200. We're kind of just fluttering around that 278. If the economy continues to go and Zscaler and cybersecurity continues to go, then maybe you get to this Wall Street target of 320 because their revisions are up. So again, I like Zscaler. Do I own it? No. I do own Amazon. Amazon. Remember how Netflix changed the game when they started charging you per household? Amazon's about to do the same thing. Remember what happened to Netflix stock when they did that? When they started cracking down on passwords, and I said, even if they get 20% of people, it's going to be a boom. That was back here in 2024. The stock was trading at $5.59. You've doubled in a year. Simple as that. Now you're leveling off on Netflix because they need to pull those triggers. But Amazon, Could Amazon double? Probably not. It's a little different style of a company. But does that push us over the 240 previous highs that were in February? Probably. I like this one. As someone who uses their parents' Prime account, I don't like it because I'm probably going to have to buy my own Prime account. But this is an interesting option for them. I like it. And you just liken that one. Amazon, again, 4-hour algorithm makes you 48% versus 65% buy and hold. This has not been a stock that has been good to buy and hold ever since July 2020. I mean, honest to God, July 2020 was a time to get out and to move on. Now, January 2023, time to buy at 84. That was common sense. $84 for freaking Amazon? You're kidding me. Now, I did hear yesterday, Adam Parker, which I like, he's on CNBC every now and then. I like him. He brought up Constellation Energy as an example. And he said, hey, what am I looking at in this thing? He said utilities. And this is a utility, Constellation Energy, to a $95 billion market cap. And he said, we are going to need energy. And it's a utility. And it gives off 2.5%. They don't pay back in dividends. He thinks this company goes to $2 trillion. What does that mean for the stock? It means it goes from 300 to 600. He also mentioned that his firm took a look at 10 baggers. Now, 10 baggers are stocks that go up 1,000%. Okay, they give you 10 times over a certain amount of time. He argued that every single one of them had to live with a 50% drawdown. Now, Constellation Energy its price target is not $600. It's $333. But it's an energy stock. And what powers energy or AI? It's energy. You're going to need energy. So he brings it up. Now, another YOLO one that I think, this is Eric Jackson. He's the one that started the open trade, Open Door. Now, Open Door is up big in pre-market. Why? Because he had a meeting yesterday. And I think people are buying into this one. It's up 2.75. It was way up earlier. Look at a 5-minute chart. This one swings. This one swings a lot. Look at this one. You could have gotten at $4.25 yesterday. You're up $1, almost 25%. Let's look. I mean, if you just bought this on the open yesterday, today you're sitting at a 25% gain. I like this one, but this is the account to follow for that one. Open. Okay, I'm going to YOLO into this one. I'm not putting a ton of money into it, but if this one goes to where Eric Jackson thinks it will, it's a big move. This is the guy that called Carvana. I mean, that's what it is. And Carvana was a huge, huge move. Now, another one that I've talked about before, NAV. Net asset value. Go and Google it. Go and ask AI about net asset value. BMNR finally trading at a NAV discount. Tom Lee added another 170,000 of ETH. So the NAV, 8.78 billion. The market cap, 7.4. Boom, it's up in pre-market. Let's go and look at it, BMNR. Now, I don't typically look at this stuff, but again, their market cap, 7.37. 7.37 billion. You're trading at a discount. It's up 2.64. This will be highly volatile. It will absolutely be highly volatile. Wall Street, there are one analyst that covers it. He thinks it's a $60 stock. I mean, again, one analyst. Do not hold that one. This will be highly volatile. I've listened to Tom Lee. I like this stock. I'm going to get into it. When? Probably look at the 4-hour algorithm on this one. So let's look. I mean, again, this one has only been open for 89 days. Got you out here with a 45% gain. 45% gain. That's fantastic. If you bought on the open down here, again, when it was 0, you're up 447. That's not realistic. But again, 39 would be a great price. Am I ever going to get that? It's at 43 right now. Maybe. Again, risk, reward. And I loved Shai's take on energy. So the Secretary of Energy, even if we wrapped the entire planet in solar panels, you would only be producing 20% of global energy. And Shai's take, somebody needs to explain to the Secretary of Energy, it's not a supply issue, it's storage, transmission, and deployment. He gives you everything. First Solar builds the panels. Tesla powers the home stack, and EOSE tackles the grid scale storage. If you're interested, go and research those. How do you research them? You use Premium and Alpha Picks, and you use Trendspider. And Trendspider extended their offer again one more day. Promise you, it is not available again. But it's 50% off. And to get my 4-hour algorithm, you don't need any. You don't need any tier. It's any tier. You don't need to do the advanced. You don't need to do the enhanced. You don't need the premium. You can sign up for the standard at $51. I would tell you get the premium because it's only like $1 more, less than $1 more per month, because it's 42% off. The reason I steer people towards this advanced, because if you don't know charting, if you don't know the Trendspider software, it is a big lift. And this gives you 52 training sessions per year, 1 per week. So think about it this way. You want to go learn piano? You're going to pay $70 an hour for somebody to teach you piano. You're also going to have to buy the freaking piano. This gives you a lesson for less than $26 per, okay? Divide 107 by 4 because you get 4 per month because there's 4 weeks per month, 52 training weeks per year. And you get the tool for free. It's like giving you the piano for a year. So again, that's the way you do this. And Shy, again, outlines this. I love this. Now let's take a look at some earnings tonight because we are at the end of the earnings season. At the end of the earnings seasons, we're going to look at this. Okay? Salesforce tonight. I got rid of this one. I bought another one. I'm up 50% on that one, at least, if not 60% on it. But again, Salesforce, expected earnings per share $2.52. It's reduced from what they reported last time. Expected revenue up slightly. Is it an opportunity? Well, Salesforce just announced that they are replacing call center agents with their software. Pretty big freaking deal. Don't count Mark Benioff out. But do I own this stock? No, I got out of it. Why? Because I don't like the way this one's trading. It wasn't a large position. It was in my Roth. I've held it for a few years. I added to it. Never really worked out. There were always better opportunities. But when you look at this weekly, is it just beaten down enough at the 200-day that we could see a nice pop? You could. Again, Salesforce out there touting stuff. One that I think a lot of people have because it's the number one 2025 stock is Credo. This is a semiconductor company. They reported 35 cents per share last time, expected 32 cents. You can't see this, but it's over here on the right. 170 million in revenue. This time expected 190 million. We know the semiconductor companies have been killing it. We know that SMCI, Hewlett-Packard, and Dell, Hewlett-Packard I think reports later, but Dell, Hewlett-Packard reports tonight, but they've all reported, shit the bed. So, do you like Credo? Well, I got rid of mine, half of mine, at 97. Where's it trading right now? It's trading at 124. It's putting in a nice shelf. 4-hour algorithm got you in here at 115. 4-hour algorithm doesn't beat buy and hold, but it wins 50% of the time. 20 positions over 24 months. So you're trading literally less than once a month. And you've got gains like 127%. We're just going to remove this segment. 127%, 3%. Huge gains. 52% back here on the left in January. And then when it dropped from here, 75, all the way down to 40, it didn't have you in, it had you out. You got out with a nice little loss, and it timed it. This is the 4-hour algorithm. This is why I have the 4-hour algorithm. I use this as a guide for all the trades that I do. Okay, and then you've got Fig with its first earnings. Who knows what the hell's going to happen with this one? This was the IPO that was hugely anticipated, that doubled, and hasn't come back yet. Remember, the IPO was at 40. This is trading at 65. Where are we going? My guess would be 40. That would be my guess. There will be a time to get in here. It's an AI play. Okay? You've got Arista Network. I'm sorry. You've got a Palantir, which just got you back in. Palantir, 157. Is this one that you wanted to get into? Because now you've got the opportunity to get in there at 157. So you've got a lot of opportunities. All of these, all the scans are going to be in the 4 hour in the newsletter. I'm sorry, I'm typing while I'm doing this because I'm messing some stuff up. But it's all in the newsletter. If you go to the newsletter and you just go down to the bottom on most posts, you'll see the scans, and those are entries in the 4 hour algorithm. So if you have any questions, you can hit me up. All of the sales, by the way, can be found at Linktree, linktr.ee/daily stock pick. You see it down below. The link is down below. But you get Trendspider, Seeking Alpha, the bundle I suggested. If you don't want the bundle, by the way, and you just want to evaluate your own stocks, you can get a free 7-day trial. Go and get the 2025 top second half and the top stocks because they're still running quite a bit. And if you just want alpha picks, you can get alpha picks. That's all on Linktree. You can get Webull. Join Webull today. You get up to 75 free stocks, by the way, my Webull account. I bought some Ethereum in Webull yesterday, so Ethereum is now in there. It is up 1%. It's now at 13.3. Remember, that was almost at 15,000 a few weeks ago. So I haven't been doing as well, but it's a highly leveraged portfolio. So again, you can get Webull. You can get $2,000 off a Tesla. I don't know what their offer is, but go and do that. You can also follow my trades on Savvy Trader. Savvy Trader is a great one. We can look at the core portfolio here against SPY. Okay, we can look at the max. The core portfolio is up, let's see, 57% during the same time period that the S&P is up 47%. It's a good portfolio. Year to date, the core portfolio is underperforming the S&P 5%. The reason? Because Eli Lilly is a large portion. Remember, this is just 100 shares of every stock of, let's see, it's 33 positions right now. It's just 100 shares. And I buy them at one time. I don't trade them. I don't optimize them. I just buy 100 shares. And it's a $1.12 million portfolio. It's a fake portfolio. But it's there. I do have other portfolios where I provide those to the paid newsletter subscribers. So if you have any questions, again, even my email address is over at Linktree. So I will talk to you tomorrow. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.